Occupancy fraud is not that hard to commit. And right now, this is a big deal because the Department of Justice has opened a criminal mortgage fraud probe into the Federal Reserve Governor, Lisa Cook. Now, first, it's really unusual for the director of the FHFA to actually give a criminal referral, but I want to show you what's going on here. In April of 2021, Lisa Cook purchased this home in Cambridge, Massachusetts as a secondary mortgage. So a secondary mortgage means that you're going to live in the home for a portion of the year, and then you can rent it out the rest of the year. That's perfectly fine. Then in June of 2021, in Ann Arbor, Michigan, there was a mortgage taken out as a primary residence. Okay, so primary is the key word here. Then in July of 2021, okay, just 1 month later, in Atlanta, there was a mortgage taken out as a primary for $540,000. This is where Lisa Cook and her attorneys are saying this is a clerical error. Right here, this is what occupancy fraud could look like. Now, of course, everything in here, innocent until proven guilty, we don't know all the details yet. But what you have to do is you can only have one primary residence at a time. If you buy multiple homes or get multiple mortgages and say that they're a primary residence, that's what's considered occupancy fraud, because a primary residence means that you're living in that home as your sole home. You can't have two of those at the same time. So then in August of 2025, Bill Polt, the director of FHFA, creates a criminal referral for occupancy fraud. So then in September of 2025, Cook's attorneys states that the fraud didn't happen. And then soon after, the Department of Justice opens a criminal probe. So what is occupancy fraud? So occupancy fraud is when someone misrepresents how they're going to use a home to try to get better loan terms. So for example, this often happens when someone claims a property is going to be their primary residence when they actually plan to rent it out. And so this is because with a primary residence, you're getting better interest rates and better loan terms than something like an investment property. An investment property is going to have a significantly higher interest rate and possibly higher upfront costs when you are buying a home. All right, so let's talk about how lenders detect fraud. So lenders care a lot about occupancy fraud because it increases the chance that someone's not going to pay back a loan, which of course is added costs and added expense to lenders. And so they're going to use different detection methods. So they're going to use systems like AI to look for any unusual patterns in loan applications. They'll randomly pull loans just at a random time to be able to look into them to see if there's any evidence or suspicion of fraud. They're also going to look at different data sources. So for instance, if your loan application says a primary residence, but then they look at your insurance paperwork and it's for a rental, okay, well, of course, there's a mismatch there that they're going to look into. And there's tons of different ways that they're actually going to try to look to see if there is occupancy fraud. Things as simple as sending a verification letter to the property to see, okay, do you live in that home? Looking up data on things like LexisNexis. They can look at loan servicing information, even going door to door and checking with neighbors as well. Now, with occupancy fraud, what ends up happening is it's not usually that there's criminal charges in this, which makes this Lisa Cook situation, again, quite a bit strange. There's likely some pretty strong political motivation here as well, but normally there isn't criminal charges. What usually happens is the loan is called. That means that the loan is due fully. So if you commit occupancy fraud, the lender can say to you, you need to pay back all of your loan right now, or we're going to foreclose on the home. And so they basically can cancel your mortgage that way. So for a lot of people, they buy their first home, they live in it, but then they want to rent it out and buy another home that they want to move into a couple of years later. And so people get confused on when they rent it out, if they can actually do that legally. Well, and the thing is, when you get a mortgage, you sign a document saying that you're going to intend on living in the home for at least 1 year. So if you rent it out before that time, you can't just rent it out and not tell anybody about it. So here's what happens. If you want to move out of your primary residence and you want to rent it out, you then have to see, have you lived in the home for at least a year? So if you have, you can move out and rent the home at any time. So you get to keep that primary residence mortgage with that lower interest rate. However, if you haven't lived in the home for at least a year, you have to refinance into an investment loan. So after you refinance into an investment loan, then you can move out of that house. But if you don't do this, again, this is where there could be suspicion of occupancy fraud. If you buy that home as a primary residence, you signed paperwork saying you were going to live in there for a year. However, you didn't, and then you want to rent it out. That can be viewed as occupancy fraud, okay? Now, on the flip side of this, if you want to sell your home, you can sell it at any time you want to. Sometimes people get confused with this 1-year rule and they think that they have to live in their home for at least a year before they sell it. If you're going to sell your home, you can sell it at any time. There's no restrictions. You can buy your home, sell it the next day, no problem at all. The only issue becomes if you're buying a primary residence, you want to rent it out, and you haven't lived in there for at least a year, then is when you need to refinance into an investment loan. Otherwise, if you've been in there for a year, you can move out, rent it at any time, and keep that low interest rate. And this is a great way to house hack, where you buy a home, live in it for a year, you get that lower interest rate of a primary residence mortgage, then you rent it out, buy another home as your primary residence, and you get to do a lower down payment and have a lower percentage interest rate on that new home as well.